Hi guys, Portfolio's been here. It's weekends already. Let's go through the chart and try to find our potential trade setups for next week. If you are new to the channel, this is what we do prior to every week, and our case study is always the gold pair. So help grow the channel by subscribing and turning on the notification button. Thank you for doing that. Let's delve right into the video. We are on the weekly time frame of gold, and we can see we are in a bullish trend confirmed by the higher high, lower high, higher high, lower high, higher high, and lower high, with the final push breaking the structure here, and then we ran into a very consolidative phase of the market. So for about 3 weeks, price have not made any significant move, as we can see on the chart. Okay, so right here, when price break the structure here, we run into a very consolidative phase. Price has just been choppy. It moved from here into this lower low, and then finally a push, but couldn't break the structure. And then we came back into these lows, but we couldn't take the liquidity. So on the weekly time frame, we conclude that price is choppy. Price is not trending currently. So we can see the indecision candle that has been created, telling us that price will either continue the trend to target these highs here, or will either come into these lows to take away the relative liquidity and possibly continue from the demand zone that has been created here. On the daily time frame, the story remains the same. We have a trending market, and then we run into a consolidative phase of the market. So we can see the range movement between these highs and these lows right there. Personally, for me, this candle is a manipulative move. Why? Because we have it to run this liquidity right there, but eventually it formed relative liquidity with these candles. So we have liquidity to target at these highs, and then liquidity to target at these lows. Now price is in the middle. What do we expect? Ideally, for me, once we are in a bullish trend, I would like this liquidity here to be taken first. Then we run into this demand zone, then we can possibly target these highs. It then follows that from next week, I expect price to open right away from here. Then we could have a little bit retracement into the body of this bearish candle. Then we can continue the down move or the bearish move into these lows right there. But the best thing you can do as a trader is to wait for any of these liquidities, so either this one or this one, to be taken first. Then you can target the other. On the 4-hour time frame, we have this bearish candle taking away these lows here, forming a change in character, but ideally I will not fall for it. Once we are moving between range, the only time I'll be interested in price is when price have reversed back into these highs right there. Then I could possibly look for a trade confirmation to target these lows right there. But on Monday, Tuesday, if market opens, then I see some kind of bearish movement into these lows, then I will just relax and wait for price to come back into these lows, take away the liquidity, tap into the demand zone. Then I'll look for trade setup and then try to capitalize on the demand zone. So there are two sides of the story right now. We could have price open right away from here, then into this relative liquidity, then possibly into this demand zone before we can have any potential move to the upside. Or we could have price open here, then we could have that retracement into this point of interest, but be very conservative when price gets into these highs. Why? Because we have this relative liquidity as a point of target. You want to confirm your trade when price gets here before you actually take the trade. Yeah, that is it for this particular video. This is my personal weekly bias for the gold pair. Happy trading next week. Bye for now.